What may work today, but it's not going to work tomorrow, is swinging for the fences and thinking on an individual trade by trade basis versus the series of trades. You only learn in the drawdowns. Those drawdowns get seared into your memory. You don't really learn through the wins. Honestly, if you have a win and you broke your rules, that's a bad thing.
Welcome everybody to another funded trader of TradethePool. Special guest is with me today, Kevin. Thanks for coming, buddy.
Thank you, Mr. Michael. I'm very excited for this interview. Very excited to be a part of the funded crew now.
For sure. And you're not just a funded trader, but you're also one of our live traders on our YouTube live trading room, one of the hosts. So it's incredible to have, not just random traders that come in and go, but actually someone that we're working with on a regular basis, showing you guys at home that it's possible. And if you follow the live trading room together with Kevin, you will see success eventually. So make sure to stick to that as well. Kevin, you traded the max 25K, right?
I'm very proud of that. The max worked very well for me. I'm excited to dive into that. I did work a couple flexes as well, but the max I had a rhythm there. The rhythm was strong. I think mainly because that the max drawdown is a lot tighter than the flex, and so when I do have a misstep, which sometimes I do, maybe a couple times a month, it's just the equity curve. It's less of an impact on that. So the flex, I would. That minus 500, with the max, I say be rigid with the rules, flexible with the profit expectations. So if you're rigid, with those rules and you're not losing as much, and on the green days you're able to maximize, push on the gas, and make even higher than the red days, it allows for a good strong equity curve that wave. Because some days I can make over that 250, that max loss on the day. The 500. I wasn't having as many over $500 days with the flex, but with the max, I'm consistently, hitting a couple $100 to $500 days, and I'm able to really just ride that storm out.
That's amazing. And what you just mentioned here, this is something that we've been talking about it for a long time. Limitation is actually good for you, right? Once you have a lower daily pause, like a tighter daily pause, it's actually reflecting your trading for the good.
Right. And I know I've watched a lot of your funded interviews, and most traders, they may not think that daily drawdown is a positive thing before going to trade the pool. But once you're there, you realize the impact of it. It's a very good thing to have that, because we all have a human nature that sometimes makes mistakes. And those days, we'll see when you look at the equity curve, those days that you do make mistakes. Like for me, it was QMMM that went from 8 to 300. I took what I thought was just a small 10 shares on it, and in the blink of an eye, I'm down $400, but capped at the 250. But I was green a couple hundred on the day, so that was rough. Losing the green and losing the max 250, but it protects you, because obviously on that trade it went much higher. I took a short at 100, thinking, okay, this is it's a natural area of resistance right here, and it goes much further than anticipated. But as it's just shooting straight up before you can even set the stop, you're liquidated. You only lose a minimum amount, and I'm pretty disciplined not to continue trading at that point. Like I'm not going to buy out of that. I'm just going to step away. Today's not my day. Let's look at the big picture. Not look at just one. Let's not just look at one trade or one day. We're looking at the series. The edge is played out through repetition.
For sure, and hopefully it was on a TradethePool account, right? Because on your broker account, who knows what was your loss there?
Right. The summer was incredibly volatile. So, there was a lot of just increased volume, increased volatility, as day traders were looking for that. We're hunters of volatility, managers of risk. So that edge that I'm trading is played out via discipline, risk management to protect it, and the consistency which compounds it over time.
Yeah. We'll dive into your trading in a second. Tell us a little bit about your story. How did you start trading?
So I started in college. That was in 2016. I've been around for a good long time. I know pretty much all of them in this industry. I've been a part of most all the chat rooms. I've learned all their strategies, and trading is mainly over time I've gravitated towards, trading is more of the psychology. There's a few different types of analysis that you can do in trading, fundamental, technical, and trader. And I tend to lean more on the trader these days, which is the psychology of trading. But it's been a bumpy road. It's been a great journey. I've seen pretty much everything you can see. You could have seen. I've been through pretty much everything you can go through, and that's why I'm in a position where I really think I can help the newer trader out, and that is my passion, Michael. I love being able to help newer traders out. I want them to avoid taking those, just huge, large losses that are essentially inevitable. I mean, you only learn in the drawdowns. Yeah, like
Yeah.
those drawdowns get seared into your memory. You don't really learn through the wins. Traders don't really learn. But honestly, if you have a win and you broke your rules, that's a bad thing. I go over results oriented trading, process oriented trading all the time. So results say, okay, I had a green trade, so it must have been a good trade, but that's not necessarily the idea. Like, you can be a new trader and just take random trades and actually come out green, right? Just how in poker and blackjack, you can play those and have no clue what you're doing, and you can still make good hands initially because, again, individual trades, there's more of a random outcome. But again, it's over the series. The house, for instance, Michael, like in poker,
Yep.
blackjack, they're not focused on individual hands. Unless you're Dana White. I just saw a video of him swinging $400,000 hands of baccarat. In that case, maybe they're a little concerned because that could mess up their quarterly earnings. But overall, it's not the individual hands that the house is worried about. Again, it's the repetition over time. So it's been a great journey. I love trading. I have such a passion here. I'm excited to dive into what's been working for me. We'll take a look at the account and just teach other traders. Again, everyone has their own trading style, their trading psychology, and that's learned over time through experience. Experience is the best teacher over time, but you'll develop that gut over time through your experience, through mentors. If you're at Trade the Pool and you're watching us live, or through any other mentor, you're going to develop that psychology out there over time, and that's what's very important. Experience ultimately is going to be the best teacher and has been for me, and that's going to include the market tuition that I discussed. You're going to lose, so why not lose on the Trade the Pool prop accounts? I highly recommend it, Michael. I'm going to be screaming it from the rooftops for people to get these accounts over at Trade the Pool because I know how much of a positive impact it has. I've seen it not only for myself but for other traders.
Yeah, for sure. You said a lot of super important stuff here. And I guess I'll just touch on the last one before jumping into your account. It's amazing to see that actually traders use our platform in order to learn about their skill, about their trading, right? So instead of just taking a demo account when you don't have any skin in the game, you take a trader pool account, a $50, $100, just to feel committed to it, right? And then you learn about your trading. And as you mentioned before, you learn from your drawdowns, right? The biggest loss that I had, that I talked about many times, it's something that actually took me to the next step in my career as a trader, as the CEO of the company. And yeah, it's good stuff.
It's
Definitely.
so much pain in the moment, and I did watch that interview with the Titans, and so I heard that story. I mean, it's in the moment. It's awful, and it's awful for the traders. But and I know that ultimately is good. Like we have to have losses. I mean, let's just pray and hope that they will have those losses on the prop, right? And they learn over at the prop firm, Trade the Pool, through these losses, but they're going to happen. They're inevitable. Again, you get seared in your memory. So that way, the next time this trade approaches, let's say you got burned, and this is a very common story. It happened to me as well 10 years ago. It's like, okay, all these rooms are saying, buy high and hope higher. You're essentially buying the top. You experience the FOMO. The chat rooms are jumping in it, and you experience that fear, the fear of missing out. I know
Yeah.
Steve who does your webinars, he went over the fears. Excellent video there. But the fear of missing out is a very potent fear that we nearly all experience when we start trading. So you lose it all, you hold and hope, you buy at the top, you sell at the bottom. There was no trading edge or strategy involved in that, and you're not going to do it again. That's a very common story. I hear it all the time, people blowing up doing that. But I mean, it nearly has to happen. I mean, for you to learn. Next
Exactly.
time that trade comes, you're not going to press it. You're going to maybe have an itch, but you're not going to scratch the itch to press that button. Yeah.
Or at least take it with a lower risk, right?
Right.
Instead of taking 1,000 shares, take 100 shares.
That's a great conversation that we could unravel there too, as far as sizing. I mean, just because again, like I did this as well in my early journey, and a lot do as too, where you're oversizing, trying to swing for home runs. And what I'm going to show you with Michael on this chart is, I mean, this is steady growth. I was not looking for home runs at all, and it's not a very sexy conversation, but I'm not into sexy conversation. I'm into profitable conversations. What works and what doesn't work, and what doesn't work, and what may work today, but it's not going to work tomorrow, is swinging for the fences and thinking
Yeah,
on an individual trade by trade basis versus the series of trades.
for sure. Okay, I'm gonna share my screen, show your dashboard. For the guys at home that not familiar with it, every trader gets his own dashboard so you can track your stats, see the progress. Let's see how you did, Kevin. Alrighty, here it is. Okay, so I traded the max 25K. That's $25,000 of buying power, which is quite enough to trade, right?
Right. It was plenty. I mean, it was plenty for how I trade. Again, I'm never swinging for, huge $1,000, 2,000, especially on this account. That's essentially $1,000. Well, $750 is the max loss, but I don't treat it like a $25,000 account. I'm not applying, huge
Everything.
risk per trade. Right. It's more like I'm going for $50 trades, just padding the wallet over time. And there were days there where I had $500 days just doing that.
Right, profit target 1500, 750 for the max loss, the daily pause. And just looking, I'm looking at your balance curve. So you had a lot of choppiness, but you always bounced back, right? And this is something that shows a lot of consistency and a lot about your personality, that you know when to stop yourself from blowing the account, you know how to get back on the horse. Tell us a little bit about those.
Well, I mean, the reason for that is because I used to know what it's like to not, get back on the horse. I would revenge trade and over trade, and I give this analogy a lot. It's like I would find myself, trying to dig myself out of a hole, and I would just dig myself deeper in a hole. So one thing, Michael, I like really try to focus on is, not getting aggressive just in recovery days, like, but getting aggressive when I'm green. It's always been one of my struggles, is fear of just like losing, fear of being wrong, and losing the money that I've already made, essentially. When I'm green, I want to stay green, and so normally I don't press the accelerator. I don't try to like go faster on those days. I just like, okay, I made $100, let me take it and move on. But when things are working, I'm trying to get more aggressive on those days versus just in recovery mode. That's what I used to do. And I would advise traders to just be familiar with yourself, because oftentimes, like when we're red, we're hopeful. When we're red, we're hopeful, and when we're green, we have a fear of losing it, and so those are when mistakes are made. So I would try to dig myself out of the hole, and my God, just dig myself deeper and deeper and deeper in that hole. So yeah, I tried to really push it on the green days and work against those emotions that are present. The mind's got to be stronger than the emotions, but there was discipline displayed there, because I mean there were days where I had to walk away. But you can notice, I mean, towards the end there, if you look, I was at 1550 on the near the end, and I did not go. So yeah, go back a little bit. I had nearly right there, right at the top, right where you are, right there. I had crossed the line, but I
Wow.
was right on the 30%. This messed with me, Michael. I'm not gonna lie. Like, even though I've been doing this for a while, like I still have emotions, and I try to tell the traders, like, the emotions don't really go away. You know what they're telling you, and so you try to, like, my emotions will say, keep trading like you're a dollar away. The reason I had not gotten disabled to move on to the funded is because I was sitting right on the 30%.
Yeah.
with the max account. So I needed to make like a few more dollars right there.
Okay.
And I was at that point, I was trading for the profit, and I was less trading like, okay, the edge is presenting itself. I was more so trying to find trades versus letting trades find me. And I was live in my room, and they were telling me they were telling me don't trade anymore, don't. And I was like, I guys, I need $1. I need like $2. So that messed me up, and I went into tilt mode and lost a good chunk. I
Yeah.
actually max lost that day, and then just climbed out of it. I said, Kevin, snap out of it. You're fine. You're a consistent trader. What messes me up is what I preach. That's why I preach it so much. I try to tell everyone, do not marry one trade. They're not loyal. Don't marry one ticker, because I will have a tendency to do that. I really get over convicted on a setup, and I start sizing too heavy and applying too much risk. And then I lose, yeah, I lose more than I predefined, more than I should have anyways. Again, that's a common story too. We just don't want to marry one trade. This
Yeah.
is the series of trades over time, because I was 58.48, percent success rate, which isn't, it's not massively
Sure.
positive. I mean, it's decent.
Yeah.
The risk reward I do want to work on a little bit. That was nearly 1 to point 0.9, not too good there. So that's something I certainly want to work on. But overall, I'm fairly satisfied with it.
Amazing. And I told you we just got back from London. There was a conference there. I was one of the speakers in a panel, and they asked me about my thinking on the evaluation, if it's really fit all traders and how it reflects on the real trading, live trading. And it was amazing to see what you just mentioned about the getting into that top, literally reaching that moment when you get to your goal or finish the cross line, but you still have the rules to apply and fix you, and then you drop. You will see the drop, and I see it many times on a lot of accounts that I'm watching, and it's incredible to see the state of mind that you need in order to be strong and good trader, right? And I love the fact that it does that, although it messes up your mind a little bit and you're losing. But those that actually will show consistency along the way will bounce back as you did, and that's just a test right
I
here.
mean, the best thing to do is to just trade well, and the money is a byproduct of that. You
Mm.
don't want to trade for the money, and certainly I made that mistake there. I was like, I'm right here. I'm trading. I'm trying to find like a pocket ace setup, and I'm trading a mirage. Like I see a 7-2 offsuit, and I'm like, this is pocket ace right here.
Yeah,
So yeah, we're certainly capable of mistakes, even as far as we are in our careers. I tell the guys, you never make it, you're always making it. A lot of the gurus out there, like, you're one trade away from being a consistent trader. No, I mean, I've seen the best traders, Michael, and I know you have too with your experience. The traders who you admire, who you look up to, they're very good traders, and they allow one trade to just ruin the whole journey. Like one trade, all it takes is one trade. You're one trade away as far as that goes. Yeah,
yeah,
as far as that goes, you have to, you guys, you just out there, like, you gotta always focus risk. Again, not a sexy conversation, but very profitable. And then this is, I want to see everybody who's not funded in the room, or who's over at Trade the Pool. I want to see them get funded. We're gonna certainly teach you the ways.
for sure. Lots of short bias, right? Only short. Are you taking any longs? Nothing, huh?
I prefer the elevator down versus the stairs up.
Okay. Yeah.
Yeah, yeah.
It's easier for me also. I don't know why exactly, but it's just easier to see it on the chart, like the place where, okay, that's it. Everything is
Yeah, you
default.
you called a play out perfect. It was like a month ago. You said, "Guys, watch the liquidity zone up here at this area," and it tapped right there. I agree. Like, with your mindset too, as far as, like, you set your levels with shorting and you just react. That's what I love about shorting. There's no predicting. I'm not like trying to buy this anticipating like a chat room coming in, or or a squeeze happening, and there's no, like, that happens a lot where there'll be no volume and then you get a squeeze. But if I'm predicting at that point, I as a short seller, I find an edge more so with just reacting to price action. A
Yeah.
confirmation over anticipation is what I say. Confirmation over anticipation.
And I love the fact that I'm going over it and I see the P&L and $80. It's not something huge, although you got the 25K. It's not, you're not making like $1,000 trade. And this is also show that you're building it from the ground up and not just looking for that one lucky trade. That's that's the
Right.
idea.
Yeah, that's not my style. I'm not looking for home runs. It's just gonna if I have a good day, it's just gonna be compounded through a lot of
Hmm.
like
Yeah.
smaller wins essentially. Like yeah, I could have 10 $80 wins, and that makes a good day for me.
Let's take one of those symbols. Give me a little bit of overview of that trade. Let's say PPG.
Okay, so PEPG, well, let me preface with this. So my setup mainly, my pocket pair ace setup is a hangover. I'm not sure if you're familiar. The hangover setup is one that I look for. This was a recent trade for me though. I do trade other hands. Like when I'm at the poker table, I'm not gonna fold every hand unless it's a pocket pair ace setup. There are other hands where I do see edge,
Yeah.
but I may put less chips on the table, right?
Exactly.
So, yeah, exactly. So, PEPG, they had come out with an offering. They diluted their current shareholders,
Mhm.
and this was buying at highs. There was a lot of FOMO involved with PEPG. So on the short side, I like to take advantage of the euphoria. When I first started, I would be buying high, hoping higher. But when you dilute your shareholders, and they diluted pretty good, it was like 31 million shares at 320. They had diluted, and so I want to ride that short down to those certain levels. So I'm going to short near at resistance. Some of these plays I do like to size dynamically. So typically I'm not trading day one moves. I like to let the FOMO guys come in day one, day two, and I like to come in day three, four, five when the ticker loses its luster. I like to come in and short and fade those as they bleed out, because they bleed because longs are stuck and they're holding and hoping, oftentimes bleeding out. PEPG though, I mean, this was the same day. Normally I'm not doing that, but again, it was the offering news I traded, and I mean, you can see that it was a head and shoulders setup, fairly
Mm.
beautiful right there. Yeah, it was a that was a clean setup. I did trade it in pre-market on the sloppy seconds pop to the highs. I call them sloppy seconds. You get the head there on the head and shoulders. You get
Yeah.
a sloppy seconds pop up there. Also, there's many variables I look for, like the increase in volume.
So
So yeah,
just
it was a slop. Yeah, it was a short against the highs. The very high, the top that it put in, that second pop up there, I shorted it against the highs. But always predefining the risk, and I want to make sure the viewers understand that. Like my best trading is when the risk is predefined. You have to manage your expectations in a positive way, which means thinking less on the individual trades. Again, I just want that to be understood. Like there are predictable, high quality setups, but at the end of the day, for me, how I manage my expectations in a positive way is making sure I'm not saying, okay, this trade is absolutely going to work. Expectations will lead to disaster. When you can create like a state of mind that's unaffected by what the market does, the
yeah.
struggle really ceases to exist, because no matter what the market does, I know what my reaction is going to be in the face of that adversity. So I will go over the consistent approach that I trade in the edge, and I certainly do have 58% edge with or 8% edge, right, with the stats that are presented to me. But ultimately, you just got to manage your expectations in a realistic, positive way. But yeah, that was that setup. I do. It's the experience over time that tells me, which trade I will trade, not just those hangovers that are day 4 or 5 that I fade on down, but there are intraday trades that I'm looking for as well that may be I see through back testing. These setups might not work as a high majority of the time like the hangovers, but I will certainly put chips on the table, because a head and shoulders, the bear flag, like in the small cap land, we halt down and then it like curls back up to those highs. Well, I know where longs are stuck, at that point. So that's a trade I like to take too, on sloppy seconds towards the highs. So there are other edges and trades I like to take as well.
Yeah, I love a few things that you just mentioned. One is, just understanding what's going on behind the candle, right? Because every time you look at the chart, that's nice. You see a candle, but if you understand the psychology behind it, then you really can act upon it and know, with percentage, like higher percentage, that
Mhm.
it should continue to the downside because, as you said, buyers are trapped, for example.
Yeah, knowing where the majority is. I mean, if you're on the side of the majority, be cautious. Somebody very wise said that. If you want to be a part of the 10% crew, you got to be doing what the 90% are not doing,
Not
and
do.
that is, yeah, exactly.
Amazing. We looked at your chart, and the risk reward ratio is 1 to 0.9, right? What do you need to do in order to push it further, higher?
Something I've been, again, that's my been consistently my struggle is the fear of losing the green that I have, and so
Mm.
oftentimes I will take it off early. So one thing I really try to do, it helps alleviate and this is just purely emotions, is scaling out along the way on the profit side.
Yeah.
So not capping it too early. One thing I have been doing is like I'll take half and leave, I call a leftover position to work. So I'll leave leftovers and set a trail through trade the pool, or leftovers and the leftovers at a break even. And with leftovers, which might be 25-50% or so the position, I just try to really not pay attention to the P&L on that, just in case I get a good fade all day. So I got to leave the leftovers on, and probably just again not be so eager to take those off. It's one thing I am working on, leaving leftovers. That's one thing I see, because we hear it all the time, like every day over however many years. It's always traders, man. If only I would have held. If only I would have held.
Yeah.
You hear it like every single day. So why not hold? Why not hold some at least? No, to eliminate that fear, take profits on it. So regardless, I'm green. The reason that helps me is like I know I'm green regardless on this trade. I took half off and the adjusted stops break even. So it either is going to pad the wallet further. I'm either going to make more on it, or I'm just going to break even on the rest. So it's one thing I'm going to work on there.
Yeah. And maybe an advice here would be just track your trades, right? For every day when you go over, let's say you made 5 trades. This is for the guys at home. Every day, let's say you made 5 trades. Go over that at the end of the day and see what would have happened if you would stay with 10%, 15%, 25%, right?
Mhm.
And eventually, if you see and you track it over time, you will see that you could have done better on that trade. So you will start, living in like the leftovers, as you mentioned.
Yeah, I mean, because like you said, it does keep your interest there. So leaving something, because otherwise we may not even look at it. But if we go back, like you said, and review those 5 trades, and we see like, if for instance I short, so at the end of the day they all faded.
Trade it.
So I gotta leave something. Then the next time I leave half on, and then it gets like a zombie hour squeeze at the end of the day.
Yes. Yeah.
No, but yeah, if majority of the time they are fading well, and you gotta so we need to see that. I think that's important. Like you said, leave something on, even if it's like hardly a position, 5%, just so it keeps your interest, so you're developing that conviction, like because you're going back and watching what did this ticker do in today all day.
And that's something that you can also take to the opposite side. So when you enter in a trade, a lot of the times you will see me taking a filler just to be committed to that trade, right? Just to watch it, to keep an eye on it. So I will take even 100 shares in, right? And I will watch that trade, and eventually I will size up if I see something that I like. But the commitment to that trade, it's like evaluation, right? Challenges. Once you have skin in the game, you start to pay attention more.
Yeah, I mean the feeler is important, and sizing dynamically. I know that's more advanced, something really through experience. Like you're gonna know like how to size. I mean, for the newer trader, it may be more difficult, starting with feelers and then knowing. But yes, having the feeler on to keep your interest, and really just not, you're unaffected which direction it goes. You just know whether it's coming to certain areas where I can size it, or is it getting to that liquidity zone that you wanted, where you're seeing, and then you can size it dynamically. Sizing is a power of scaling is crucial. That's a whole nother topic. It's very important though.
For sure, for sure. Kevin, it was a pleasure. I'm sure the guys that just listened had a lot of fun and also got your insight and knowledge. And as we said, go and check Kevin on our live YouTube stream every day. Also, the call-in show that we just added, you can actually call and talk to Kevin live. So appreciate the time, Kevin.
Oh, it was such a pleasure. I love this interview. And yeah, absolutely, guys, join in. Always happy to assist in any way I can. So I appreciate all of you.
Amazing. For those of you who want to check us out, go to tradethepool.com. We'll be in touch soon. Yeah. Bye for now.
Thank you.